Good morning, traders. It's 8 a.m. Chicago time on Wednesday, the 7th of June, 2023. This is episode number 2478. We are 22 episodes away from 2,500 episodes. Woohoo! What do you get when we hit 2,500 episodes? Probably just more episodes. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. At the end of this thing, I want to talk a little bit about the Nasdaq and Nasdaq statistics, so hang tight. We're going to go through and look at what the market has done, what it's doing, what it's trying to do, all that good stuff. Here we go. We'll start with the Convergent Trading pre-market summary sheet. More information on Convergent if you go to the YouTube video and look at the description, there are a bunch of links there. Those are the same links you see at the bottom right box. Um, the Twitter account, twitter.com/conv trading, and you can just follow and set an alert for when this sheet drops every morning at about 8:50 Eastern. And also, the glossary is important because I'm using terms here that you may not be familiar with, and you might be able to go find them in a glossary so you can understand what the heck is going on. Go to ct.pro/glossary terms. Looking at the S&P, the Russell, wow. The Russell's just been on a tear. If you recall, the Russell was stuck in a range from about 1823 to about 1730, maybe something like that, has broken out, and man, it is really shoving its way through to 1900. So it's kind of interesting because we talked about what was it? I think a week ago I talked about the Russell with our Russell Maven at Convergent Trading, our head trader for the Russell, and we were talking about how just absolutely no opportunities, no movement, no direction. And when is he going to start looking at other products? And then, blammo, this thing starts ripping. So maybe you can tell me what the opposite of what you want to see, and I can repeat it out loud so that it can just do what you want it to do. I don't know. But the Russell's up 65 basis points, far and away from its settlement price, more than any other U.S. product or European product at that. The Euro stocks and the DAX are pretty much flat, mixed, mixed posture coming into the markets, which means that the overnight session really didn't accomplish very much or didn't move away. As far as earnings, you got your Campbell Soup, and United Natural Foods, and then after the close, GameStop, which is a big Wall Street bets play, GME, and then Trip.com. What's on deck? $1 trillion plus dollars plus post U.S. debt deal borrowing set to put banks under pressure. There's a lot going on in the Treasury auctions and the Treasury markets. Uh, just a flood of paper. Chinese exports plunge in May. This is a big deal for the overnight. This is seen as China just basically not recovering, not giving the globe the demand that it needs. This is what somewhat of what crude has been responding to, and copper and others. It's just China didn't really the China COVID reopening wasn't as didn't create as big a pop as the market had priced in. So that's watching China's releases is pretty important currently. U.S. Treasury Secretary Yellen sees path to bringing down inflation while maintaining strong labor market. This is, I think, what they call the soft landing. We still have to see that unicorn. Coinbase faces existential threat from SEC lawsuit. This is the same as Binance. Frankly, this looks bad for everybody. These exchanges have been operating in the United States for years, since what, 2017, 16, 18, I don't know. And only now the SEC is responding to them in an argument that they are, in fact, providing securities. And the SEC, through these lawsuits, is asserting its authority because there has been a back and forth with the CFTC, which is a commodity regulator. It's what regulates futures, futures brokers, clearing firms, and so on. They've been battling back and forth on what a token is. Is it a security or is it a commodity? Token sounds like a commodity, but it behaves like a security. So this is kind of uh, somewhat political, I think, but we'll see. This morning, before the market opened, we had a bunch of releases in the overnight session. I'm not going to go through all of them. The key of which was the U.S. balance of trade came in at a deficit of 74.6 billion versus 75.2 billion expected. This is worse than the prior 60.6 billion. Bank of Canada rate decision comes out at 10 o'clock. This is important, of course. Very, very hot market, real estate market over there. And at a 10:30, we get the EIA crude oil stock inventories. The inventory number for crude is expected at 1.022 million. The prior's 4.488 million surplus. Gasoline expecting 880,000 surplus. The prior is a deficit of 207,000 barrels. And then we get consumer credit at 3, and then GDP growth rate Q on Q final from Japan for Q1. This is a bit of a stale number. Looking at the S&P multi-distribution profile, 150,000 contracts traded. 150,000 contracts traded. The market is really, it's got multiple distributions, but it has been balancing around the 42.93-ish, 93.50 or so. That's the point of control in the overnight session. The inventory is 33% long, and the range is 15 and a quarter points, slightly better than the 11 and a quarter points we had yesterday. Again, the point of control is just under the 4,300 at 42.93.50, and the high is 42.96.75 with the low of 42.81.50. Pretty tight, pretty tight. The mode of the range. Who does not know what a mode is? Please learn what a mode is in statistics. Trading is statistics. The mode is 28 points. This is the expected overnight range, and we have 15. So you can see it's well below the mode. It's still within the first standard deviation, so nothing exceptional today, but well below the mode over the last year. The mode of the last year's benefited a lot from all the volatility. In fact, I showed this chart yesterday in our trade talk at Convergent. Let me pull it up. Let me pull it up and show it to you here because it is interesting so you can see what's happening here. Daily. Hang on. VIX futures. So here's your VIX futures chart. Look at that baby. Bam. It is really dropping here. We had VIX futures continuous spiking during the pandemic, and it's just kind of pushing lows, continuously pushing lows. Not going to talk about this very much other than to say let's just manage our expectations, huh? So that's what I wanted to cover there. Yesterday, I did talk about the markets looking to take out the prior lows. So yesterday, the main plan, we had this double TPO low. The idea is that the market may break it, consolidate, come back in, and then I was really hoping it would continue down to 42.50, and then if 42.50 doesn't hold, then it would come back to the other side, the support shown in the green band here, at 42.40. This would have been just a beauty if it had worked, right? The alternate scenario is that if it does push higher than 42.85, the response up would get us into the prior settle, and that would act as a base for continuation into 4300 and the challenge of 4305 or 4306 from the other day, that red resistance or maroon resistance band you see in front of you there. Those are the two main scenarios expected. Pretty okay range. The range yesterday was what is that? 26 points for the day for the RTH session. Not so great, but it is what it is. It's just the environment that we're in currently. This chart here shows where anticipated support and resistance are. Tons of support beneath us. The resistance right now is this double top ish from 2 days ago. It's a weak high, and then support is underneath us at approximately 42.72, 42.73, and we're in the middle. So as we look at this, as we look at this action, we start to ask ourselves, what is the auction that's going on inside of balance here? And so we overlay an additional profile which gives us a point of control right on top, an MC point of control of this region, right on top of this 4290. 4290, we're currently trading at 4294. So we are just really have been in balance for some time now. For since Friday, we've come up here. We tried to push on Monday. We did manage to put in a higher high, higher low on Monday. Finished weak on Monday, opened weak yesterday, and then traded basically into balance yesterday and held in balance yesterday. So completely balanced profile yesterday. Somewhat of a double distribution looking profile, but really realistically it was a balanced profile with the point of control 4290 on the nose. So to me, this is more of what we had down below. Let me clear my throat, please. 1 second. This is more of what we had down below. I mean, we're pushing, in general, what the market is doing is it's pushing extremes, and then you're looking for an extreme, an attempt to sweep up, and then a reversion back to the middle. This is really the MO of the market currently. It's not really directional. It was directional last Friday, but for the last couple of days we've been in balance. Remember, the market spends more time in balance than outside of it, and so options underlay. Spends more time in balance than outside of it, and so we're sitting in here. We're sitting here waiting for the next leg. So if you look at this, if we zoom out and look at this from a price action perspective, this looks like a bull flag, right? So we've run up, consolidated in these large waves, and then finally broke out higher. And we are consolidating near highs here. The 4305 looks pretty weak at the moment. Very likely to get tested. There's a lot going on in that 4305, 4310 on the monthly, so pay attention to that. But for now, that's where we are. So if we look at the overnight session, however, what's going on within the overnight session? We have a little bit of separation between the mid VWAP and the overnight point of control. We may see some pretty decent tests this morning. This is likely, we're likely to see some pretty decent movement this morning. The LIS this morning early on is going to be around that 42.88, 87 area, which was in play a lot yesterday. That's right here. this zone right here, which coincides with the mid, it just plays along with this area from yesterday. This is the early LIS. The expectation is the overnight stat would be taken out on the upside. The overnight session has already taken out yesterday's high by 2 points. The naked point of control is at 97. We went to 96.75, so we just stopped just short of it. I'm talking about the naked point of control from Monday, and then comes the century figure. Once we clear the century figure, the expectation is to make that run to 43.16. 43.16 is the number we're looking for. Hey, look at that. That actually looks like my handwriting for once. I'm getting pretty good writing with the mouse. So that would be the target to the upside. It's only, that's not terrible. It's only about 23 points up, which is what we've been kind of getting in terms of range. If it does get down into the 88 and then breaks through, then the play here. So if we move down and then do a gap to settle, break through, then what we're looking for is a weak pullback for short, and then we're looking for it to get the overnight stat to the downside, and then to retest that 42, that band that I had on the other screen at 72. This would be, again, the bigger trades are to the downside. The tighter trades, tougher trades, I think, are on the long side. Not that I have a bear bias or anything like that. It's just on a day trading basis, it just moves more quickly. But 43.16 is the number to note going forward. Okay, looking at the NQ. Oops, hang on. The NQ. NQ pretty aggressive overnight. This is a 1 tick by 20 chart. The NQ has a similar line in the sand around 560 down here. 560. This would be the area that is very likely to give in. If we get below here, it's very likely to push through into the 530 area, 500 then after that, and so on and so forth. But right now, we do have, again, in the Nasdaq, we do have separation. We have a multi-distribution profile. We have not tested yesterday's high, so the Nasdaq's relatively weaker, but the delta overall in the Nasdaq is just garbage. There isn't any directional conviction at all. You could see the delta is just hasn't gone anywhere really. It's pulled back with the price action down, but has hardly recovered. Really, it's just flat with price. So we may need to kind of sit out the Nasdaq for the first half hour until it makes up its mind. Then we'll trade based on what it did in the first half hour, and then we'd measure the performance in the next half hour, and so on. Again, I want to talk about the Nasdaq separately a little bit at length today, some stats and so on. Here's crude. Crude is really poised to pop. So if we look at crude, here's the crude chart. Crude has remained above 672. Crude is very likely to check that 73 and then the 74. Crude is making an argument here. It had a very early LIS at 72.40 right here. 72.40. This was multiple tests here, and it's holding this early high from from 2 days ago at 72.30, but crude looks like it is likely to pull back to gain some buyers, and I'm expecting crude up at 73. Okay, so expecting crude to kind of take its path back towards the upper box, the upper distribution. Remember, 72 is about the 50% point of this entire balance zone, and we're kind of stuck here right in the middle of this entire balance zone with the point of control of the balance zone here at 72. Crude isn't doing very much. RTY, look at this thing. It's just been sideways, 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 and is now taking off and has already taken off in the overnight session. It's trading at 1870 with a high of 71, I believe. And it has already taken back this weak structure right here. So we're trading in the weak structure, and we've made it all the way back through this kind of weakish structure, and it's coming back. And so what we have to do now is go to a higher time frame and then look at where the next balance zone is. So if we take the high, if we take the high from the RTY, unfortunately it'll take a minute to load that volume, and look for the next balance zone above, and that would be the key target in the NQ. Okay, so I told you the play for today in terms of the ES, really the 43 retest of 43.06, retest, and then a push for 43.16. It's really a dip buying environment for the most part, in my opinion. And then, why? Because we've pushed up, we've broken out of balance, so that's key. We've pushed up, we have not given up these higher prices, and every dip down into the 72, 73 area has been bought, which is where that stock zone comes from. And so the expectation now, you look at this structure right here, boom, 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 and we're at it again. To me, this is very much primed to push through and test the 43.06. I'm just rounding it. It's really 43.0575, and then the 43.16 above, also rounding that. The Delta, however, is so lazy this morning. Really not much. It seems like the small and large lots fighting each other, so it could be choppy on the open. But we're not, we don't have overlay of the mid VWAP and the overnight point of control. We don't have overlay on each other, so there's a little bit of separation here between the point of control, VWAP, and mid. So I'm expecting this thing to kind of be more aggressive with its testing this morning, but I'm going to be looking for signs for a rally again to 43.06 and 16. So that's my plan. So I want to talk to you about this real quick. I am making my way to creating a path for the NQ becoming a primary product. And so what I'm sharing with you here is the convergent trading. This is what's called an MSR. An MSR, you can get information on this with this link. I'm going to drop a link in the YouTube chat here. Where are you? But an MSR is a quantitative or statistical report, and it shows, it tells you how many samples it's testing. It's about 3 years is what we're looking back to. It's defining what RTH is. It's defining what the IB is. All this good information, what the value of a tick is, initial margin, blah, 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 blah. And then we get into statistics. And what we're looking for when we're looking at this thing is like dark orange stats. You could see a neutral extreme day on a neutral day occurs 57% of the time, so there's about a 7% edge. Neutral days. So how do we use this information? I'll give you an example. Maybe you can guess. But I'll give you an example of how this information is used. Let me change my pen color real quick. I'm going to try to make this quick. What this is saying is neutral day is when the IB high and the IB low are broken. And what this is saying is in the NQ, there's about a 76% historical probability that if one initial balance side is broken, the other would not be. So what you're likely to see is if the market goes and creates the IB and breaks the IB, if there's a circumstance where the market comes back and starts walking to the other side, there's a lower probability that that other side is broken. But if it is, this creates a big opportunity because a lot of people are going to be wrong because of that stat. So this is the sort of thing that we look at. Opening location. If we open below the prior low a day, how often do we open below the prior low a day? How often do we open above the prior close, prior high a day, and so on and so forth? And then it tells us, so we can look at it immediately. So today we have the NQ. The NQ's trading at what? What is the NQ trading at currently? Right here, 14,601. So if we go to the MSR and look at it, it's opening within the prior range. So if it opens within the prior range, the historical probability on 454 samples, which is good enough, there's a 73.35% historical probability that would touch the prior close. So that becomes, so what we're doing here, the purpose of the MSR is to help us tease out setups. So we're looking at quantitative information, and then we look at we're not interested in a value that's around the 50% mark, although you can build around that. You're really looking for what are the low or the highest and lowest probabilities, and then you're building building a setup around that. And that's exactly what I'm going to do with the Nasdaq. I'm going to check to see how this is relative to the ES. Just pull up the MSR for the ES and then compare it to this, and then look for anomalies. Opens below previous range. So if we open below the previous range, very remote probability that we would touch the prior day's high a day, right? Because we're opening below. The probability of touching the prior IB low is at 43%. The IB high at 16%. Prior low of day touch, and that it closes the gap zone, is 71. So that becomes one of our primary setups, is to go, if it opens below the low a day, we expect responsive buying with a 71.43% historical probability, and so on and so forth. How often does it touch the prior value area if it opens below the range? Less than half the time, and so on and so forth. The overnight stat, the probability that the overnight high or low would be touched is right here. It's almost 95%. Okay, remember this was updated just last week. 95%, and so on and so forth. So we only have a minute to the open. I'll leave you with that, but I wanted to show you where I start, and I start with the market stats reports, and they tell me what the rotations are. You get the rotation stats. Here they are at 777 samples, blah blah blah, this. What's a normal rotation? It's up to 24.5 points with the point of control at 14 points. So that tells me what to expect there in terms of rotations and things like that. If you're a Convergent member, please make sure you're looking at these periodically. Good luck today, and I'll catch you tomorrow morning. Take care.